Hi everyone, this is a video for 3-14 and 3-15. This is actually a continuation on 3-13 that you have to complete. So here is the trial balance for 3-13b. So we're going to use this information to fill out the chart that we need. So let's go ahead and start. The total revenue for the month, that would be service fees. So $9,800. Total expenses for the month, we're going to have to break out the calculator. So we have rent expense, wages expense, phone expense, and advertising expense. So our total expenses are $3,300. So our net income for the month, $9,800 minus $3,300 gives a net income of $6,500. So we have original investment in the business. So we have the capital of $30,000. Our net income of $6,500. The drawing account is $3,000. Our increase in capital is $6,500 minus the drawing of $3,000 gives us $3,500. So the ending owner's equity is $33,500. And so now we have to complete part B, which is our total of assets, our liabilities, and our owner's equity to make sure that everything does balance. So our assets are $20,200 plus $2,700 plus $300 plus $800 plus $6,000 plus $8,000. So our assets are $38,000. Our liabilities are $4,500. It's the account payable. Our owner's equity is the $33,500. So let's just see if our equation balances. 4,500 plus 33,500. Great, so our equation does balance. So now we're going to move on to the financial statements. So again, if we go to page 33 in our textbook, it'll tell us what financial statements we need. So the first one we're going to do is always the income statement. And so this is Janet's Plumbing Services income statement, and it is for the month ended August, I believe. Yep, so August 31st. And so basically what we can do now to make things easier on us later is just copy the information now. This would be the statement of owner's equity. And the last one is the balance sheet. So the income statement is revenues. So in this case, you would look at the trial balance. So we have service fees is our revenue account. if I can type accurately. And then we have our expenses. So we have rent expense, wages expense, phone expense, advertising expense. So if we go back to our textbook, so the revenue is going to go all the way over to the right. So our revenue is $4,500. So then we're going to list our expenses. $700, $500, $100, $2,000. Then we list total expenses. Enter that amount over here. And we've already totaled the expenses on 14. Total expenses are $3,300. And we've already calculated our net income to be $6,500. That doesn't make sense. Our service fees, it helps if this is one of the problems students run into. Entered the wrong amount. Happens to everybody. There we go. That makes a lot more sense for our net income to be $6,500. And so we'll need this amount. Let's put it in orange because we're going to need that on the statement of owner's equity. So let's go back to our textbook. For the statement of owner's equity, we have the owner's name. We have capital August 1st, 2000. We have investments during August. Total investment. Net income, which is where we enter in the amount previously. Less withdrawals for August. Increase in capital. And then we have our owner at the end of the month. So the capital at the beginning of the month is usually going to be 0. The investments for August would be the $30,000. So our total investment is $30,000. Our net income is $6,500. The withdrawal that the owner took out was $3,000. Oops. So our increase in capital is $3,500. So that makes our capital $33,500. And then we're going to need this amount on the balance sheet. So if we go back to our textbook, there we go. So the balance sheet, we have our assets on one side. And so here's where we're going to list the assets we have. We have cash, accounts receivable, office supplies, prepaid insurance, plumbing equipment, van. And we're going to enter the amounts. 20,200, 2,700, 300, 800, 6,000, 8,000. And then here we're going to have our liabilities. In this case, it's going to be accounts payable. That is 4,500. We're going to have owner's equity. Then we're going to have Savings capital. And this is where we're going to put the 33,500. And then if we go back to the book, we have total assets. And then we have total liability, and owner's equity. So we're going to add up all of our assets, which we have already done, of 38,000. And that should still equal 4,500 plus 33,500 is 38,000. And so that is how you do 14 and 15. If you have any questions, let me know.